Welcome to This Week in Money. I'm Jim Goddard. Today, Bob Hoye from chartsandmarkets.com runs down the major markets for the week. Has the trend of setting new highs ended? Noted West Vancouver realtor Allan Angell, who has sold over 4,000 properties, gives us his perspective on the 2020 real estate market. It appears while interest rates are low, banks are reluctant to part with mortgage money. WolfStreet.com publisher Wolf Richter checks in from San Francisco on what's happening with the automotive markets. Can Americans be convinced to part with their gas-guzzling SUVs? Plus, at the end of the show, we'll have company showcase updates from American Manganese President Larry Reaugh and Cyprus Development corporate consultant Don Mosher. We'll talk to Bob Hoye right after this.
Cyprus Development Corp is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cyprus Development Corp trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYD-VF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cyprusdevelopmentcorp.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com, where you'll find insightful market commentary and timely technical analysis. Welcome back to the show, Bob.
Well, good to be with you, Jim. It's been an interesting week.
Bob, have the markets stopped setting record highs every week?
That's the way to describe it. It's been a terrific rush. Lots of enthusiasm for stocks and also for lower grade bonds. They were bidding up industrial commodities like base metals and crude oil. Very good stuff. And also there's some basis there in the economy, which is then making this expansion exceptionally long. And I think some of it is due to the Trump reforms in the United States, where he's attempting to reduce the influence in taxation and take by government bureaucracies, and allowing a little more freedom for business and making the investment world in the U.S. a little more attractive. So you've had U.S. corporate money, which was parked offshore, coming back, and it has to do something. And then you've had the rest of the world buying New York stock market because you have the biggest and most liquid stocks there. So it's become quite the fad. However, there are some ways of looking at this, and one is using our historical approach that anybody can use, and we latched onto this in early October and looked for a good rush, a rally, strong enough perhaps to become overbought, and also possibly completing in the late December into January window. And the reason for working on this timing was that in the past, and going way back, there's a number of examples of really good speculative markets reaching their best in this time window. You never explain why. You just say, hey, this is the way it works. So then we get into our questions, sort of a checklist. And is the market up when it should be? Yep, this time window. Are there signs of speculation? Well, yeah, it's been a terrific rush, but this shows up on our technical research, where we've been getting exceptional momentum readings, and we're also getting some pattern readings that you only see at or near major highs in the stock market. So then this goes back a few weeks for us when you were having all of this exceptional stuff, and you know that when it rolls over, the punctuation mark will be when one of the or all of the senior stock indexes take out a previous key low. So the mystery is in between, and it looks like the mystery was solved this week because you've had some reversals where on the New York Stock Exchange Comp Index, you've set a lower low than last week's low. I think that was the same for the Dow Jones. And then you've had on the base metals, including copper, setting lower lows than a week ago. And then you've had something similar with crude oil. So this is what's happened this week. So then if you go across the page and look at what the U.S. dollar is doing, which some few weeks ago it had declined to being a little oversold and was quietly kind of going up. Well, it firmed up on the week and actually is close to breaking out, which would then set the uptrend in for the U.S. dollar. And in the recent past, the dollar going down has been friendly to the New York financial markets like stocks and lower grade bonds, as well as commodities, and then going up has been unfriendly. So you have the action of a correction in the stocks and bonds, I would say stocks and low grade bonds, being confirmed by similar but opposite in the U.S. dollar index. So let's just sum it on the week is that it's a week of transition, and from many, many weeks of really enthusiastic action, and now perhaps a change. So it works for our model where we're expecting a high at this time of year. And I should mention, Jim, some of the previous ones. There was a big bull market completed in January the 11th, 1973, and it was followed by the 1973-74 bear market, which was the worst since the 1930s. And then moving on ahead, you had the crazy gold and silver speculation that completed, and as best I recall, it was January 20th of 1980, where that huge bubble blew out, and it was followed by a long bear market for precious metals. Another one that was spectacular was the speculation in Tokyo with the Nikkei index, and it ran up to a big high, and that one was the last trading day of the year. And even more recently, in 2017, you had the Bitcoin bubble, which was absolutely fabulous, and it blew out in the middle of December. And then also in that then January, the big New York Stock Exchange set a huge momentum high, from which it sold off 20%. So, very enthusiastic highs, Jim, I hate to say it, at this time of year can set an important high and be followed by a substantial correction.
Well, Bob, you were referring to the late 70s, early 80s and the gold rush there. Do you expect that to happen this time?
Like set up another market for gold?
Yes.
There's a counterplay in here on previous big financial bubbles like 1929 or 1873 and going way back. You take the price of gold in the senior currency and deflate it by the consumer price index, and it's called the real price of gold. And it typically declines in a great bubble, and in looking at it this time around, gold set its, the real price set its high on that speculative peak in 2011. And you can say that in 2018 and 2019 it was basing, in 2017 and 2018 gold's real price was basing as various aspects of the bubble around the world were concluding. And then now it is in an uptrend, and that is typical of a post-bubble contraction. So it's likely early days of a lengthy bull market in the gold sector. And this has worked a number of times in the past, so it's just the way it works. But I think at the moment, well, actually a week or so ago, the gold stocks became quite overbought. So it looks like the market, the big New York Stock Exchange, Toronto, ordinary stocks will get hit on a correction, and it would also pull back the gold stocks. But a major setback in the big stock market and low-grade bonds and industrial commodities would set up the right conditions for extending the rise in gold's real price. Now, emphasizing this, Jim, is that it reflects the profitability of gold mining. And if the gold's real price is going up, it's been related to times when your profit margins have been improving. And then that gets gold miners mining more gold, and it makes it for a bull market for the sector. But also for exploration stocks, because you get a rising real price of gold, it also enhances valuation studies on exploration properties and exploration companies. So this is ahead of us, and it's going to be tricky to get positioned in it. But what we would be doing now is lightening up on the broader type of stock market, which has had really good action. And also underneath it, although in a great bubble, Jim, the stock market gets most of the attention, but underneath it has been terrific speculation in the bond markets, and which are bigger than the stock markets. And there's certain things that go on in the credit markets, like in the yield curve, for example, which is the difference between long-dated and short-dated bonds. And last summer it inverted, which means that short rates got higher than long rates. And on our work, we've got charts on the yield curve back to 1857 in the U.S., and whenever that curve inverts, it has been followed by a recession. So we've had the inversion. It's no longer inverted, but it's had the inversion. Now, then the other part we like to watch is the credit spreads, which is the difference between high-grade bonds like government bonds, Government of Canada's or U.S. Treasuries, and low-grade bonds like junk bonds. And in a strong bull market, everybody's enthusiastic and confident, and then you have these spreads narrowing. And so they widened through the summer, and then of the last 2 or 3 months, the spreads have been narrowing on a correction. But this week, they started to turn. So, and as this can be a telltale. So what we see between, one other item on the stock market is that the old Dow theory, which goes back to about 1900, when a bull market is on, you have the Dow Industrials and the Dow Transports. They used to call them the rails. They both advance together and make new highs together. And then one of the items that can anticipate a top of a bull market is when the transports do not make new highs. So as the Dow and the S&P have been making new highs recently, on the transports. So the old ancient indicator, the Dow theory, has been giving a warning for these last few months. So I think the correction could be significant. And it depends on how the rebound comes out of that, but we'll be able to tell more as the next month or so comes along. But it's time for our listeners to take a look at their portfolios and say, hey, it's been a great party. We should take some money off the table. It's always tough to do, but it's practical to do it.
Bob, thank you so much for being on This Week in Money.
Oh, good to be with you, and look forward anytime.
My guest has been market historian Bob Hoye. He's the chief investment strategist for chartsandmarkets.com. He was speaking to us from Vancouver. Coming up, Allan Mark Angell, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMY.V, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. I'm speaking with Allan Mark Angell. He's one of the top realtors in Canada. He has sold more than 4,000 properties. He's located in West Vancouver, Canada, and online at theangellgroup.com. That's spelt Angell group.com. Allan, welcome back to This Week in Money.
Thank you, Connie. I'm very glad to be here.
Allan, from a boots-on-the-ground perspective, what are you seeing in the West Vancouver market?
A couple of things that I just want to go. I've been a realtor for a long since 1972, and I still work. I'm working as hard as ever. I spend 25 hours a week, at least that, just analyzing the markets, studying it. No other realtor will spend that time. That they depend on the board stats, which is an indication, but it's not exact enough on a bad market. There's two things that amaze me in my big business. Is one thing that everybody does, which I can never understand when they're going to put their house on the market. They think they should have 3-4 realtors in and talk to them all. The most I've ever had is one time they had 9. So it's insane. The problem you have with that, as soon as I'm told that I'm going to compete, they're going to have me and 3 others or 2 others. I know chances are I won't get the house, even though I should get it, because I would always tell the people what is the fair price on the house. When you get 99% of the realtors, as soon as they know they're going to compete, they're going to be higher. I just did an appraisal. I told them probably 2.6, 2.7. And of course somebody went up to 3.5 and so got the house. Now, when the market's falling, that costs you so much money. It's insane because you drop it, but you never quite catch up to the market. And then what also that I can't stand, finally they get an offer in the 2s and they say, oh, well, Allan Angell was, and he told us it was worth it. I guess that's probably what it's worth. We better take this offer. So all I've done is help the realtor who got it overpriced to sell the place, which irritates me because that realtor just bought when they're told the price to do that. So I could never understand why people pick a realtor that you know in the area from your friends or whatever that is very successful and they've had good service with. Tell that realtor, listen, give me an honest price. I'm only talking to you. Give me the price. Now, if for some reason our personalities don't match, well, then I'll talk to somebody else. But just give the honest price, and if you convince me that's what it's worth, you've got the house. You're going to get the real price, and you need that more. The way the market's been for 2 is you need that so much. So please, this rule about 3 or 4 realtors in there. I mean, the time I went into 9 appraisals, the husband I didn't like, so when the wife came home, I told her, listen, your husband's not my type of character, so please give it to somebody else. Well, they called me in a week and they said, please, would you take our house? The only one my husband liked was you. The other one was he didn't believe a word they said. So truth helps, but sometimes it can hurt. The other thing that drives me nuts on a market we've just had is that why do people list with their friend who knows a realtor or something like that? This is your biggest investment. This is hundreds of thousands of dollars in some cases. And they give it to an average realtor, and they don't spend the time studying the market. I'm showing a house this weekend, for example. It came on with a very good realtor at 216 for 5.1. 5.1. 218, it didn't sell. It came on at 3.9. I'm showing it this weekend. This is the third realtor. They're asking 2,690 for it. I mean, that's mind-boggling what has happened out there. And so, the market is so touchy. You have to be careful who you choose as your realtor.
Allan, how is the market looking for 2020?
Well, I'm actually quite positive. I mean, I'm hardly ever the guys always say that one of the good real estate is I put in little notes that I think we're going to have a reasonable year. There's a lot of positive signs, like in my area, West Van. The last 6 months of last year, I mean, even though it was 2018 and 19 were the worst years in history, but the last 6 months was higher than the last 6 months of 2018, 2017, 2016. I have to go back 4 years before we had more sales. 2015, the last 6 months had more sales of that than we had. A lot more things are happening. The market, I predicted January of last year, I figured the housing market would bottom out late summer, fall. And it looks as if it has to me. Prices are probably at the bottom. Now, you're still going to see price reductions because most people are overpriced, so they still have to drop. But the attitudes change. There's a lot more buyers because people wanted to buy the house last year or two, but they don't want to overpay for it. So I'm quite optimistic that we're not going to have a banner year by any means when you look at the stats, but it should be better and more and busier than it has been the last 2 or 3 years.
Do you have the sales numbers for 2019, and how does 2019 compare to previous years?
Well, it's interesting. This is the stats that I love the best. I do all areas. I do West Van, North Van, Richmond, Vancouver East, the 3 Burnaby areas, Tri-Cities. I do them all. So if you take the Greater Vancouver, let's do the Greater Vancouver. The average sales since the 80s, Greater Vancouver, is 14,061. 14,000 sales the average. 218 was the worst we ever had at 7,524. 219 was the second worst, and 208 was the third worst. So we're miles away from being the average, but so the 18 and 19 were the worst years in history. In my area, exactly the same. My average sales are 736. 218, we had 321. We're now over 400, and 208 was the third worst at 456. Vancouver West is actually scary. The average is just under 1,700, and 208 or 218, sorry, they had 701. So I mean, think of it, 1,000 less than the average. 219, 759. 208, 1,024. So Vancouver West, which boggles my mind, would be the realtors who say, "Oh, well, the market's okay over there. We're holding our prices." Don't tell me if the average is 1,700 sales in the last 2 years, you've been 701, 729, that prices are holding. There's not a chance on earth that that's the case. All areas are the same. 18 and 19, since I've been a realtor in the 70s, have been the worst years since I started doing my stats. It's insane. But, so that's what's going on. The stats are terrible. But we've had 2 bad years. 2017 was like the 4th worst year. So we've really had 3 horrendous years in our business. 3 horrendous years. So hopefully it's over with.
Are people now getting more house for their money?
Well, a lot more. I just said the house that I'm showing, 216, they're asking over 5 for it. Now it's on for 2,690. And that realtor who had it, the realtor who had it 216 has been around. He was my partner for years, and he's been around longer than I have. And he's a very successful realtor. So obviously, if I'm buying that house at 2.5 today, and they started 4 years ago at over 5, I'm getting a lot of house. But now that seems to be rare. That one seems to be rare, but that's what there is out there. So it's a great time to buy.
What is the listings to sales ratio for the various categories of homes in West Vancouver?
Well, I break them all down to private. Right now, like I break down by price range, under 2 million, 2 to 3, by on the high end, over 10 million, between 6 and 10. Still, like if you're between 6 million and 10 million, right now there's 58 houses on the market. We're selling 3 per month, so 3 out of 58. So it's horrible. If you go down to 2 to 3 million, 76 listings right now. We're doing 13 a month. So even that's 6 months. 6 months to sell a house between 2 and 3. So it's still long ways to go. But as I said, you have to price it right. And the trouble with the homeowners, I just had one I sold the other day, way more than it was worth. I mean, I went in there, the homeowner said, my Overtown realtor says the market is going up. My lady overpaid by a few $100,000. Now, she could, she knew that I said, here's what it's worth. I tell her what it's worth, and boom, that's what they paid. I mean, I look back to the biggest sale I have ever had. I sold it to the guy, and then he phoned me 2 weeks after he was in, and he said, Allan, how much is the house you just sold me worth? And that was the toughest question I've ever had in my career. So I thought about how do I justify the price he paid? He knew what the offers were before and everything else. So I told him the truth. You overpaid by $8 million. $8 million you overpaid by. And so I thought, there was dead silence. Then he starts to laugh. He says, thank you for telling me the truth. That was a tough question for you. The bank justifies it. You're within $500,000 of what the bank said. So there are people who overpay because they have the money. They want that one house, but that's very, very rare. And you can imagine how tough it is to get the people to pay that price. This one I just sold is a townhouse or apartment here. And as I said, it's in the threes, but she overpaid, a few $100,000, but she wanted the place. It was a nightmare to close the deal. It took me a month to close it. It can happen, but, most times if you get close to what it's worth it, that's as good as you will get.
Mark, is there a big difference between looking at a home as an asset or looking at it as, look, this is the place I've always dreamed of owning. It's got everything I want. It's in the right neighborhood. It has a terrific view. I don't care what the price is. I'm going to pay for it because that's my home, and I don't really plan to leave it.
It depends on the culture. Yes, like the two examples I just gave you. We can get agents where we buy with our heart. We buy it because my wife wants that house. I like it too. If I've got the money, that fits us. I'm overpaying, but as I tell people, yes, you're overpaying today. I'm telling you right now, you're overpaying. I'm not going to say it's worth that, it isn't, but you're going to live there the next 10, 15 years. The market's going to go up or down 2 or 3 times, so you won't care. So yes, we will overpay. The Chinese are totally different. This is purely investment for them. A lot of Chinese work at China. They come here. The husbands are gone for 10 months of the year. They buy for the best value that they can see. The husband's not going to be staying in the house much. It's his wife and kids, so they do. The Persians are kind of the same type. They like to buy. This is an investment for them, make money. That's all it's for. So the two cultures buy with their head. The normal European type Caucasians buy with their heart.
What causes some high-end homes in West Vancouver to be listed for sale at twice their 2019 assessed value?
Well, what they're happening, the reason they're doing that, they're trying to get money somewhere else. I see this a lot. They will list, there's no chance to sell, but they have those people that are doing that live around the world. They're using their asset here to get money for someplace else. So they show them, say, look at my house in Vancouver. It's listed at $12 million. $12 million. And so that, they say, listen, I need some money for this. That's what they do. I had a house once that I appraised at 12 million. And I didn't get it. As it turned out, she owed about 12 million on the place. But anyway, she put it on for 27. 27. There was no chance to sell. But she borrowed money off everybody. her friends, everybody saying, listen, look at my house, it's 27. You know what I mean? So they're trying to get money from somewhere else or prove that their net worth is higher than it actually is.
Have properties been selling above or below their BC assessment valuations?
Well, this is an interesting question because I do all the assessments of all the sales. Our government told us that we're going to lower the prices. You know, it's not going to affect the average person. It's going to affect the wealthy. Well, unfortunately, it backfired. The interest rates are so low, the wealthy don't have to sell. If you take the top 25 sales in West Vancouver last year, 32% of them got over assessed value. Over assessed value. If you take 25 in the middle, 24% of them got over the value. If you take the bottom 25, which is, the lowest price houses, only 16 got over assessment. So 84% got less than assessed value of the lower range houses. The high range, 68% got less. So whatever the government tells you, you can just about guarantee is going to backfire. They increased all the taxes to get more revenue. It backfired. Absolutely drives me nuts.
Are West Vancouver waterfront properties selling?
Well, there's good news and bad news on that because I've sold so many waterfronts over my career. And the average waterfront from Horseshoe Bay into Amoside is 19 a year. That's what's been selling. Now, in 2017 we sold 9, 2018 we sold 9, and 2019 we sold 8. So that's far away. It's driven the average down a bit. So no, we're not close to the 19. But the good news is this. In the last 3 months, the last 2.5 months of those 8, 6 of them sold. 6 of them sold, 1 in October and the other 5 in November, December. So that's a very good sign. Now prices, I sold one of those and it was a very low price. But so the prices are so far up, but if we can sell 6 houses in 2.5 months, that shows you, yes, that's another indicator the market's changing because they're now starting to buy the oceanfront. So I'm quite positive about that.
What are the foreign owners in West Vancouver doing?
They're really, most of the foreign owners, as I said, they weren't born here. They do not, the Chinese especially, do not like to lose money. They will wait until the interest rates are so low. They could hold on to them. They will wait until the market changes. I mean, I remember I did a couple of months ago. I said, how many houses are on over 7 million in West Side and West Vancouver? There were 279 over 7 million. 279 to choose from. How many were we selling a month? 3. So 3 out of 279. So basically, the foreign owners that own the more expensive houses, they're just going to wait until the government changes or the tax rules changes or something so they can make a profit. So really, they're not, government says, we're going to affect the foreign. Yes, it has affected foreign because they're not buying. You can't come up and buy and pay 20% tax. And Trudeau says he's going to have another 1% foreign buyer. He made a statement. We may put another 1% tax on the foreign buyers to stop this hot market. I mean, our market ended May of 16. May of 16. The government started all the taxes August 17. They had no idea what was going on in the market. The board didn't tell them that. Nobody did. That's insane. So the foreign buyers, they're not coming because you're not going to pay. If you're buying a $5 million house, you think just the one tax is $1 million for the one tax. So they're not buying. So the ones that are here will just simply wait until the market improves and sell them.
Is the 20% foreign buyer tax in BC racist?
I've never been asked that question. I never thought of it being that way, to be honest with you. But I'm the type if somebody calls you a racist, I normally find the person that calls you one is the racist. Over at West Vancouver, was on the news last night. Years ago in the 1930s, when the race probably bought all the land, and they bought all the land about the highway, there was a covenant on you couldn't be African or Chinese, and you couldn't buy own homes there. They're still on the title. They're still on the title. Whenever I sell to a Chinese person, I have to say, listen, this covenant's on there from the 30s, but it's not being enforced, so don't worry about it. But there's an alderman, last night was on the news, he's Chinese, says, listen, we got to get this off, because that was probably a racist thing when it was put on, yes. But nowadays, I don't see it that way. What bothers me is that the government invites you into the country, invite the Chinese into the country, come to our country. They come here, then all of a sudden, because they have so much more money than us here, there's so many complaints about it, then they put all the taxes on the foreign buyer. Did they do it because they were Chinese? I mean, if it was French coming over with all the money, they would probably do the same thing. So I never see that as a racist thing.
Has the 20% foreign buyer tax and the speculation tax harmed real estate in BC, considering, as you said, it peaked in 2016? Why do we need those taxes now?
We don't need the taxes now. We don't need the taxes now. As I said, the government, you know, my philosophy about government is, one of the problems that I have, I look at every business. There's 2 or 3 great athletes in basketball, hockey. There's 2 or 3 great lawyers, 2 or 3 great realtors, 2 or 3 good doctors. Government, anybody in that category never goes into the government. It's all the rest that go in there. When you look at our government here and you see what minister this is there and what minister that is, these people weren't qualified to do this, so they make up these rules, and they're so wrong. They don't have an expert in the field. Normally, I consider myself probably the most knowledgeable realtor that the Lower Mainland has ever had, because I spent 25 hours a week. Have I ever had a call from the banks or that? No, not at all. They call the board. The board's not made up of realtors. The board's made up of administrative guys. They don't sell it. They don't know how to do it. They have nothing to do with it. We have a superintendent of real estate here. He was a lawyer from back east in the Yukon. He's in charge of everything. I tried to talk to him, but no, we're going to talk to the board. The board's the last person you should talk to. It drives me nuts. If they had knowledge that the market was over in May 16, the banks probably would have prepared better. The real estate, the government probably wouldn't have put the taxes in, but they asked the wrong people.
We'll have more with Allan Mark Angell when This Week in Money returns.
Allan Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Allan's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at allanresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Allan Mark Angell. In 2008 and 2009, Vancouver real estate experienced a V-shaped bottom, not the usual L-shaped bottom following a real estate collapse. In 2008 and 9 in the U.S., Spain, and Ireland, all the experienced real estate collapses there had L bottoms. Vancouver has since experienced a real estate bubble top in the spring of 2016. Prices are now down, but they have not put in an L-shaped bottom. Is it possible we could see a continued price collapse ahead, leading to an L-shaped bottom for the greater Vancouver area?
Well, you know, it's fun. I was asked that question today about the V-shape. I didn't know what a V-shaped bottom even meant. Then I realized, so what it basically meant, in 2008, until the last 2 years, 2008 was the worst year we ever had throughout the Lower Mainland. Okay? Then 2009, it picked up, so it went straight down and started to climb up again. That was very unusual. No, that didn't happen in all areas. In my area, West Vancouver, it was the L. It bottomed out, the state that increased a small amount, but basically stayed flat for 2 or 3 years. So we had the V in 2008. So that happened. And do I expect that to happen now? No, I don't. In 2011, mainland China arrived. So that's why it jumped up so much. So they were probably starting to arrive in 2008. The reason we had the V, probably in 2009 and 10, they started to arrive. And then there's a lot of things. So that was like 1989 was still the best year in real estate history. No matter whatever you go, if you take Greater Vancouver area, or as I say, Vancouver West, they had 2,800 sales in 1989. We had 1,200 sales. We've never hit close to those figures since. Since the year 2000, Vancouver, they've broken 2,000. So they're 800 sales behind 1989. West Vancouver, same thing, is the best. So yes, we had kind of a V, but I think that was the mainland China that was preparing the cup. Same as 89. Why was 89 the biggest year? Because 86 we had the fair here, the expo. A lot of foreigners came and they got prepared to come. So it took 3 years to get up to the best year we ever had. I think 2008 was the V year because mainland China, well, plus in Hong Kong, mainland China arrived. That's what happened then. What I'm expecting now, I'm expecting the L-shaped market again. I mean, so you think about it. That's what's going on. 18 was the worst year ever. 19 is the second worst. So we haven't seen now. There's a few more sales, but it's still the second worst year. So I am expecting, because of the government's situation, the taxes, that the bank's attitude is terrible. You can't get a mortgage at the bank. So I'm expecting the L shape. So it should be just flat for a couple of years. There will be acceptance, but somebody will overpay because they want that particular house. If that's the only one they want, yes. So I'm expecting the L shape.
How does today's real estate market feel compared to the boom and bust market of the early 80s?
Well, it's totally different because 1980 and 81, that's where I was selling more houses than anybody, and in Canada actually, and so it was in 1980, houses started to crash. They went down to. I sold a house I remember in 1980 for it was $840,000. 1981, I sold the same house at $317,000. But there were more sales then. Now, MLS didn't start till 1980, so we didn't have all the records, but I was at a company called Blockbuster. We had our own catalog, so we had more sales then than we do now, simply because the interest rates were 18-20%. So even the high end had to sell. If you had a large mortgage on your house, most of the foreign investors come in, the Chinese, they want to get a mortgage here, so they will put 50% down. So they have a 50% mortgage just to establish credit here and all the rest. So the interest rates were so high, people had to sell. So I was still selling more expensive houses, not like the price up today, anywhere near it, but they had to sell. So that was a different kind of market. Everybody wanted out. 20% was insane. So everybody wanted out of their house. So no, it's not comparable to here at all.
If mortgage rates doubled from where they are now, would it be equivalent to the 80s when rates doubled?
I think if that happened here, I think we would have a massive crash. A massive crash. It'd be like, as I said, but I mean, prices have come down so much here. It's insane. So yes, it'll be worse. If that happens, we got a real problem here. Because if you look at it, look at our prices here. Now, I'm very pro-U.S. I'd like to holiday there and things like that. But I could go to Palm Desert, buy a beautiful house for $1 million on the golf course, a pool. It's $2 million. You're getting a palace. So we are still expensive here because Canada is a nice place to live. It's safer. Now if that ever changed, we'll have a problem. But I think that it's still a great place to live, and the prices should hold because people like what is going. You don't have to lock my door. I leave it home. I leave the door open half the time. I don't lock it. I should now. It's on a high up balcony and everything else. But I mean, it's you feel safer here.
You might have answered this question, but are banks making it easier to get mortgages?
No, the banks have been a real problem. As I said, if the banks had called a guy like me in 2016, I would have said, guys, listen, the market just ended. I do stats. It's every day, 3 hours, 5 hours a day, because I don't, I'm showing houses, as much as I can. I need houses to sell right now. I don't have enough product. When I was at my peak, I had 40 or 50 houses on the market. Now I'm older and I like about 10, but I've only got like 4 houses right now. I need stuff to do. So if the banks knew in May of 16 that, listen, this is what's going on here. The market's just bottomed out. Just crashed right now. Now it's going to take the average people, the average person, probably a year to realize it's changed that much. Because the board at 217, the president was on 217 a year, and 3 months later saying the market's still great. He was crazy. Totally wrong. So if the banks knew then, they could have prepared. They wouldn't have to take just drastic measures. That's what they should do. They talk to the board. They talk to the wrong people. They're not realtors, and most of the realtors use the board. 99.5% of the realtors use the board. Well, I do too, but as I said, I look at new sales each month. When the board announces the sales for February the 1st, for here's January sales, every deal is subject for 2 weeks. So last 2 weeks of January are not even counted in anything. Why don't they wait till the 20th of every month? I send an email out to so many of my clients. So I wait till the 20th of the month, so I've got 99% of the sales from the previous month. On the 1st of the month, when I looked January the 1st, I said, how could they possibly sometimes they're 48% out. The highest bid is 48% out. You can't use their figures. Now, at the end of the year, they're very close to total sales. But with a market like this, you have to analyze the market each week. One house sells, it changes that price range completely if it's too low. So you need that information. But the bank was like the real estate board, way behind the market. Then they went too far. It made it impossible to get a mortgage.
Do you expect high-end inventory to increase as we get closer to the spring market?
Well, yes, but you should like right now, I look at January the 1st, how many houses in all the areas, how many houses are in the west side, how many houses there. And we will, in West Van, we have 301. Probably by a couple of months, we will be another 25% on that market. The timing, like Christmas and New Year, my best time last year, November, December, I've only sold 2 houses in January, but the month sales are here. But my best months, November, December, were my 2 best months of the year. And all the realtors say, look, spring market is going to be great. We don't let's put it on after Christmas. The mistake they make is that, number one, it comes on too high. When the spring market isn't what you expect, now it's May, it's too late. You drop it, but you're not dropping it far down. The reason I love November, December is because as of November 1st and especially December 1st, probably a third of the houses come off the market. Well, I don't want to sell it over Christmas time. I don't do that. I can't bother. So the products is so much less. I remember my house on the ocean front. The ocean fronts are never easy to sell. I had it on and, I took it off. I didn't want to be bought at Christmas time. And then finally, I said, I left it on for next Christmas. Somebody flew in from New York and bought my waterfront home on December the 16th. So that's when I love that time because the buyers are real buyers. If I'm out showing houses November, December in the rain, they're here to buy. Springtime, everybody's been locked up in the house for 2 or 3 months. Let's go and look at open houses for something to do on Sunday. So the realtors always make that mistake. They always tell people, oh, listen, it's really slow right now. It's a terrible time to sell, but springtime would be great. There's so much more product on. If I had an expensive house right now, I would have it on right now. If I had any house right now, I would have it on right now because, as I said, a lot of people buy it. The spring market's always higher simply because most people that sell have kids. They hope to sell their house in March or April. Completion the end of June. They move in the new house for the summertime. They're ready to go to the new school in the fall. But I would start now because the inventory, everybody's going to come. All the realtors, it'll be higher in the springtime. So they always come on at too high a price.
Are foreclosures increasing in West Vancouver?
Yeah, they're increasing all over the place. But whose fault is that? Number one, it's the banks because they didn't have the knowledge of it ahead of time. Number two, the realtors. The realtors, because they don't do proper stats, they sell people the house. I don't have a soul that I sold that had a foreclosure problem because I told people, no, I wouldn't buy now. I would wait. I would wait, because I suspect this is what's going to happen, and that's it. But, the average realtor just they want to sell something, and they sell something, and boom, they pay so much for it. Just as when I was selling houses, I sold in 2017, I knew the market was really over. There were 2 sales that, 2 other realtors sold them from, and they're one of the other 2 realtors. They both sold 2 of my houses in the properties for 5.9 and 5.6. Long completion. They always want long completion because they're trying to sell something else. Now, when both of those deals went to close, I had like $400,000 down payment. If I owned those houses, I would have walked away from my $400,000 because those houses had already dropped more than $400,000. Both of those deals completed, and I was so glad they did. But I said, "Great, I'm so glad for my clients." But those guys are going to be in trouble like I can't believe. There was one we sold. It was a lot, $7 million, and I sold the woman in the 70s for $68,000. They bought it for $7 million. I said, "Oh, I hope they're going to build there, because if they're going to try and resell this lot, there's no hope." That lot just came off the market just shortly. They put it back on to make money. It never did sell, of course. So you've got to have belief in your realtor who knows what is going on. Otherwise, you'll lose your shirt.
If people price their property to the market today, are they likely to get a sale?
Yes. 2 things. Yes, they need to, but they need to believe that it's the right price. If the realtor's right, you'll tell them it's the right price. And then you have to look at, as I do, how many realtors do this? I have no idea. They're in a price. Let's say they're between $4 and $5 million in West Van. There's 46 on the market right now, and we're only selling 2 a month. So 2 out of 46 is nothing. That's 2 years to sell your product. So you have to price it right, but you have to price it so it looks like it's the best deal on the market. Because they're not going to just look at your house. They're going to look at 10 houses, say. So your house has to be priced. So yours, we're probably going to increase. It'll be next one to be 3 sales, and next you'll have to 4 sales or more. So you have to look at how much product is on the market. And I say, if there's 46 listings right there, these are, in my mind, these are the best. We have to be better than them if we want to sell.
Are the policies of the provincial NDP and federal Liberal governments having an effect on high-end real estate?
Well, yes, it is. But as I said, huge. But they have the money. They don't have to sell. So really, the difficult, what the NDC says is going to happen is totally opposite. It's affected. I mean, in the area that I live in Caulfield in West Vancouver, I remember at the end of the year there were 2 houses sold. I can't, but the lots used to be $2.5 million. If it has a view, it was $3.5 million. There were 2 houses that sold at like 145, 1.5, which was shocking. Assessments are 2.1 and 2.2. So they were great buys. So it hasn't affected the wealthy as they told the people it would. We're going to get the prices down, but it affected the average person a lot more.
The BC government said housing starts in the province are declining. Will that lead to a shortage of homes for sale and actually really boost prices?
No, you can't build a house right now because it's whatever you're building it for, you wouldn't get the price you think of. That's where our main foreclosures are in areas where builders have bought lots to sell, to hope to build a house, sell to the Chinese or something. That's where they bought little shacks on these houses. They're the ones that are having the problem, or the new construction, because they paid so much for that lot. Amplified down to Reaugh, you paid $4 to $4.5 million. They have a 60-foot lot with a view. Now they're in the 2s. So, I mean, it's insane. It's insane. These guys bought the lot. They can't build. They just stop construction because they'll never build and sell it to get back their money at all. It's better for them to just stop, because, you get a mortgage on a new house, you get a mortgage increased as you build. So you better to have the lowest small mortgage, shut the project down for a year or something, or 2, maybe, and then try and do it again.
Is real estate the lifeblood of the BC economy?
Well, my belief is that if you do the right way, yes, it is. I mean, I look back at my career. We have a client that we showed houses to this week, and they're the nicest people. They had two normal jobs, nothing, a big company here. They just worked in a normal job. We met them when they were young. My wife and I met them when they were young guys. They believed in us. They did exactly what we told them to do, So they started building, $800,000. The last house we did for them, we sold it for over $6 million, and they had a clear title. So there's an example of there. If you have the right realtor working for you, and if you have a normal dog, I'm just working, if you get the right information, you can. They're now spending their life traveling, for Pete's sakes. They both just retired, a lot younger than I am. I'm here working my butt. We're taking them out there. We just sold them another one of their places, a townhouse. We're taking them out this weekend. They're holidaying all the time. Here I am working all the time. But that's my fault. I love to work. I got to have something to do, so that's what I do. So if you get real estate to me is the most important thing in our province, because if you do it right, you do it very well until the government takes the equity out of your house.
How can governments make housing more affordable?
Well, it's too expensive here. But I think if they made a deal, with some of the landowners, like the British properties here, it's above the highway. Everybody should have a right to live and be able to buy. The British properties bought that land in 1939. Take a portion of, make a deal with them, and just build lower priced housing there. You could do it in all kinds of it. There's certain areas just underneath the Lionsgate Bridge that it's a huge, vast project that isn't used for anything. Build something down there. It's under the bridge and up, but if they work with the developers, give them some tax breaks, you could do that. That's the only way it's going to work. You can't make it good for all the people, but if you help some, try and find a job in West Vancouver. Every restaurant place, we need help. It's too expensive rent. They can't buy here. So they have to come into their restaurant as a server or something from miles away, and you've got to have transportation. So it's tough. There's ways to do this, but they don't seem to have the expertise to do that. They think we'll just drop the prices. That has not worked. The average individual has been kicked to death, not the wealthy.
How tough is it for realtors that are starting out today?
Well, it's awful. It's awful. I mean, to do in our areas like it, when I was at my peak, selling over 100 houses a year in West Vancouver, the top guy last year I think did 34 sales. Now, that's changed because there's so many less houses. But what else has changed in the area is that if you take all the sales in West Van, just about 50% of them are sold by realtors who come from over town. When I was a kid in the 80s and 90s, we had 4 or 5 guys who would drive across the bridge. The Chinese arrived, and they will drive across the bridge. They have a team. They drive across the bridge. So half of our sales, if we have 400 sales, so 200 of them are sold by realtors at another, North Vancouver, over town. So it's much tougher. There's not as many sales. It's like Wayne Gretzky used to score 200 and some points a year. Now the top guys are scoring 100 points. So for a new guy, it's very tough. The realtor used to be individuals. Now a lot of it is team. So you join a team and you learn the ropes. But it's so tough right now. Why would you want to list with a new? It was the same thing. I took 12 salesmen for my first year, and I really know that was quite good for somebody who started so bad and everything else. But you could, if you do well, you can make a lot of money in our business. But you have to spend the time. My first 8 years, I didn't have a holiday. I just worked. That's what you have to do. And it's tough for the young people because the youth of today seems to be so entitled. I find it unbelievable. They think they deserve this. So yes, it's tough, but if you do well and work hard, you can give you a great life.
Do you invest in real estate?
Well, I don't now. I'm too old. I can't take a chance. Like my own house here, I knew what was going to happen. I had a couple of offers on it, and I said, okay, well, I know it's going to drop a lot. I should sell it. So I got the offer. I said, you know what? I love this house. I didn't sell it, but I didn't realize. I knew the market was getting over because of adjustment. I didn't realize that this government put all these taxes in, so it dropped so much more than I expected. So much more that I will, in my age now, I probably won't gain that back. So is it worthwhile for me to invest now? No. If you're older, it's not. You can't take the chance. You're 35, 40, great. My biggest client, I had one client I met in 1973, and I golf with this gentleman all the time. We've done over 60 deals. It's very tough for a realtor to buy houses for their own investment. I remember when I bought my house on the ocean. We put it on the market. We dropped it 3 times. Then I decided, wow, there's 257 feet here. I can hit golf balls. I bought 80,000 golf balls. All the connects came out. All of a sudden, it balls in the water and everything else. But when I decided to buy it, that's, I want to go back to original. If you want to buy it, I want the original price and no fee. So I had to overpay for it. So for us, if Allan Angell wants to buy a house, or my partner Malcolm wants to buy a house, we have to pay a lot for it. So I take my clients at this one client. I said, guys, I'm going to tell you what I would do. I would buy this one. I'll tell you when to sell, what you should do, and that's it. And I've done 60-40 deals with them. So no, I don't invest now.
Mark, do you have any wisdom you can share on the pitfalls of investing in real estate? Well,
it's so tough. Yeah, see, most people have done well because the market took off and they've done well. But you can't, is that going to last for ever and ever? My first waterfront sale was $110,000, and then the biggest sale I had was just under $30 million on the same street, a couple doors away. So if somebody told me I did $110,000, I made $7,000, I did this and sold it, thought I was rich. So can you count on that going on? Yes, it's going. I think it'll. We live in a great place. It probably would, but the difficulty is that you need to pick the realtor that does the stats the right way and knows what is going on. Because tell them, what would you buy? Because most realtors just, I like this one. The buyer says, I like it. I think, is this a good buy? Oh, it's absolutely. He just wants us to sell out. That's the biggest, but that's why there's so many people being foreclosed on, because the choice of realtor was the wrong one. So you have to fight. It's tough. It's tough because realtors are starving now. They just want the deal.
Do you think former Prince Harry and Meghan could end up buying in West Vancouver?
No. It was on there was some information out the other day. It was our company, actually, that they were buying a house in the Vancouver area, and somehow they said who it was, and it said it was Angell Hansen that was doing the deal. I don't think they're going to buy. I mean, there's no sign of them ever being here. They're living, they seem to be on the island. I look at West End. Those people will need privacy. I mean, their life, no matter what happens, they're going to get people. The paparazzi's not as bad here. That's another beef. I don't know why you can take somebody's picture without their permission. It boggles my mind that you can take anybody's picture. That's totally wrong. But there's not enough properties like that they're private enough and large enough for them to come here and have their privacy in West Van. So no, I don't think there's a chance of it. I hope I'm wrong.
Yeah. Do you think in BC, I mean, we do have loads of celebrities and very rich people who do live here and live private lives, because in British Columbia, I think we think of ourselves as cool people, and it's just not cool to ogle or harass famous people because perhaps we think we might be famous someday.
Yeah, well, I've sold a lot of movie stars and blah blah here. I've sold a lot of big celebrities, and but sometimes I remember I got an actress. I said, "How come you chose me?" She said, "Well, you just sold my friend from so and so. Her show was so famous, and you sold her place." And and you didn't even talk about her big. She was so impressed, so she referred me to you. The truth was that I didn't know who she was. But yes, we, most times we sell a privacy thing, a confidential, so we don't, and I see the people, they're just people to me. And you have to treat them as, if I'm a celebrity, even I've sold a lot of houses, people recognize me in the grocery line, and that's nice, but I'm just a realtor, nobody important. But these people deserve their privacy. As I said, I don't know why anybody's allowed to take their picture without their permission. That law should be out there. I don't know why somebody can put things online about you that don't even know you. That's totally wrong. That should be a law against that.
What's the best way to get a hold of you?
Please, guys, here's my phone number. There's an easy way to contact me, 778-888-7474. So 888-7474. I love to talk with real estate. I can tell you how many sales are in Maple Ridge, how many sales in Tri-Cities, what I think is going to happen, all the rest. I do this every day because I love it. Jim, I thank you kindly.
Allan, thank you so much.
Okay, bye-ball.
My guest has been Allan Mark Angell. You can contact him through his website, theangelgroup.com. That's spelled ANGELL group.com. Coming up, Wolf Richter, next on This Week in Money.
Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Allan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the 2019 drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. My guest is Wolf Richter, publisher of wolfstreet.com. He's speaking to us from San Francisco, who I think should be Vancouver's official sister city, but I don't get a vote in it. Wolf, welcome back to the show.
Thanks for having me back, Tim.
Wolf, China is the biggest market for cars and trucks in the world. How many do they sell in a day, do you know?
In a day? I know how many they sell in a year, and it's around 22 million vehicles. At least they used to sell that many. The Chinese market has surpassed the U.S. market back in I think 2013 or 2014, and it has boomed for 3 decades straight. And during the financial crisis, when auto sales were collapsing in the United States, and when GM and Chrysler went bankrupt, the Chinese government threw huge amounts of incentives on their new vehicle market, and new vehicle sales in China actually boomed by 53% in 2009. That's during the middle of the financial crisis, and by 33% in 2010. And I mean, that's how they've approached their auto market for the past 30 years. They have just thrown incentives at it every time there's a little wrinkle. And because it was one of the high priority industries. And almost all vehicles that are sold in China are manufactured in China. And they have stopped doing that. So now there's a big wrinkle in the Chinese market, and the Chinese government has withdrawn a lot of the incentives, and has actually withdrawn incentives on what calls the new energy vehicles. So those electric vehicles and plug-in hybrids and hydrogen vehicles. And car sales have dropped, and they have dropped now 18 months in a row on a year-over-year basis. That started in July of 2018. And for the whole year of 2018, they were down 4%. For the whole year of 2019, they were down 10%. And these are deliveries. So by auto dealers to their customers of cars and light trucks. So this does not include buses and commercial trucks. And that's the first time in modern Chinese history that auto sales have actually dropped on a year-over-year basis. Now they've done it twice in a row. They're now down to 21.4 million vehicles from close to 25 million 2 years ago. Since the peak in 2017, they have dropped 13%. I mean, those are huge numbers. Those are gigantic numbers. And, there's problems around the world with new vehicle sales. But to drop 13% in 2 years, that's a big number. And for the largest market in the world to do that, that translates into about 3 million vehicles less sold than in 2017. So, it doesn't impact, exports by various manufacturers in the United States. Europe, biggest they export very little to China. They all have plants with joint ventures, and that's required. All automakers have had to build plants in China. They've had to have joint ventures with Chinese partners. Some of the partners are state-owned enterprises. There was required technology transfer. That was part of the deal. If you wanted to do business in China, you had to follow the rules of technology transfer through your joint ventures. And GM was the second largest foreign brand in China, and GM sells through its joint ventures. It sells more vehicles in China than it does in the United States. And at the same time, it is getting clobbered too. So it peaked in 2017 with 4 million vehicles sold in China. 4 million. That's a huge number for GM. In the United States at that time, it was below 3 million. So this is how big GM has gotten in China. And in 2019, that came down to just a little over 3 million. So it's a drop of over 23% in vehicle deliveries in China. Now, luxury is doing really well in China. And despite the declines in overall vehicle sales, almost all luxury brands have grown in 2019. And GM's Cadillac brand has grown, and they're also manufactured in China. And that was the only brand that GM has in China that actually booked sales increases. And in terms of Ford, it's even worse. Ford has a huge disaster on its hand in China. I'm not exactly sure what all the reasons are. Ford sales peaked in 2016 in China at about 1.3 million vehicles and has since plunged 56%. When you think about this, a 56% drop in a 3-year time period in vehicle sales, that is worse than what happened during the financial crisis from 2008 to 2011. And so Ford is essentially getting wiped out in China. They've been promising for years they're going to have new models, they're going to have this, they're going to have that, they're going to turn this around, they've changed personnel, they've done everything in the book, and they haven't been able to turn anything around yet. So, Ford is just completely getting crushed in China. When we go through the brands, all luxury brands have done well. Ford doesn't have a real luxury brand in China, but like we pointed at Cadillac, but BMW, Mercedes, and Audi have both. All three of them have booked big sales increases. Those are the top luxury brands in China. Audi used to be the number one luxury brand in China. That changed this year. It was edged out by BMW and Mercedes both. So Mercedes now became the number one with a sales increase of 6%. BMW surged 13% in sales, and Audi sales were up 4%. So these are really strong numbers in a declining market, and you can tell that the luxury segment is doing really well. We've seen that in Toyota's luxury brand too, which had so that's Lexus, and its sales increased by 25%. Honda didn't separately split out its Acura sales, which is its luxury brand, but its overall sales increased. So luxury segment is doing exceptionally well in China, and it's a very small segment, so it can't really impact the overall numbers that well. But it tells you something about the overall market. There's a lot of consumers that are maybe struggling, that have trouble getting finance. They're trying to buy the mid-range or the lower-range vehicles, and that's for sales that get beaten up. At the top end, at this point, everything is hunky-dory, and people are splurging. Maybe they're stretching to get there. The Chinese are very image conscious, so if they can afford at all anything in the luxury range, they will go for it. Then there's another problem in China. It is very difficult now to drive anywhere. When we complain about congestion in our cities here in North America, but there's nothing compared to the congestion on Chinese streets. And it's hard to park. Parking is very expensive. Mass transit is very good and modern, so there's less of a need. So it looks to me like the market has matured now finally after all these decades, and going forward it will just be a slog. You'll maybe the Chinese auto sales will never reach that peak again that they had in 2017, and it also creates a huge supply of used vehicles that the Chinese didn't have before. They didn't have really any new vehicle sales. Now, this boom in vehicle sales over the past 10 years has created a used vehicle market, and the used vehicle market is now doing really well in China. It didn't even exist before, really. But now it's there. So if you want a lower end vehicle, you might buy something that's 2 or 3 years or 4 years old. And, that's an option people didn't used to have. Now they have it. And, so we're seeing that in a structural way that the market has changed. It's fairly saturated. It's hard to drive anything around. It's very expensive to park. It's difficult to park. And there's lots of options in the used car market. So, I think the market will look similar to what the United States market has looked for the past 20 years, in that it's a very saturated market. At the same time, luxury, as long as the Chinese economy creates millionaires and billionaires, luxury will do well. And it looks like going forward that really I don't see any slowdown in that unless the Chinese economy takes a big hit. And that may well happen. Yeah, there's all kinds of issues in the banking system right now, and the government is bailing out banks left and right, and especially the smaller regional banks are in real trouble. There's hundreds of them that are going to have to be dealt with. And the Chinese government has been very forceful in trying to not pass these losses on to investors. So they've pretty much gotten bailed out, and that has to create that perception that you can't lose money in China. So while and so the luxury segment benefits from this, people fall secure in their wealth, and so far that's what we're seeing. But at the mid to lower range, China has a very difficult market now.
We'll have more with Wolf Richter right after the break.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com. This Week in Money is archived online at TalkDigitalNetwork.com.
Welcome back. We're speaking with Wolf Richter. Wolf, the U.S. has now dropped to the second largest market for cars and trucks, new ones in the world. How did it get there? And how does Tesla fit into the picture?
The auto sales in the United States peaked in the year 2000. And then what we're looking at, they got very close to peaking in 1999, and then peaked in 2000. And then what we're looking at is like a 20-year plateau with a Grand Canyon in the middle. And the Grand Canyon is the financial crisis when auto sales over a 4-year period plunged 40% and then spent the next 6 years climbing out of it. And so now they've plateaued again. And so in 2019, auto sales were below both 2015 and 2016, and were below the year 2000, and were just above the year 1999. That's the market we have in the United States. Yeah, it is incredibly mature, and this is despite population growth. There's quite a bit of population growth in the United States, but it comes with a number of factors that power it. One is that vehicles last longer. They are older now. Every year, the average age of the vehicle fleet in the United States is growing. They can be driven more. There is a generational, or maybe not even a generational, but a preference shift now that housing market has changed. there has been a huge boom in construction in city centers of high-rise buildings, condos, and apartments. So people have moved closer to work, and there's less need to drive. So households may be able to get away with one vehicle, or in some cities maybe not even any vehicles at all, instead of having 2 or 3 vehicles, as you would in the suburbs. So these are big shifts that are happening, and despite population growth, vehicle sales are back where they were 20 years ago and are below that. And, that's a very tough market to be in for automakers. And that's one of the reasons I saw that. That's one of the reasons why a couple of decades ago, GM and Ford started going into China, and then particularly after the financial crisis, GM went very aggressively into China. And because there's really not a lot of growth in the United States, any. Now, in 2019, sales fell 1.2% to 17.1 million vehicles in the United States. It's not a huge decline, and it's down close to 2.5% from 2015 and 2016. It's down a couple of percentage points from the year 2000. So we're not talking a plunge in sales like we're talking about in China, but it's just back to that plateau right now with sort of a decline built into it after we've gone through that Grand Canyon of the financial crisis and the recovery after that. The automakers are handling this in different ways, and there are some gainers in it, but the big ones, GM in the United States peaked in 2015 and has since dropped about 5% to about 2.9 million vehicle sales in the United States. So it remains the largest automaker in the United States, but it's down 5% since 2015. Ford, and that takes GM back to about to pre-2014 level. So, that's a pretty significant drop, 5% for GM. Ford is down quite a bit. It fell 3% in just last year. It's down about 7% from its peak in 2015. So that put it below 2013 levels. Toyota's number 3 in the United States, and they dropped from their peak in 2015, and now they're back where they were in 2014. This is the kind of landscape we're looking at. Some of the other brands are, Honda is down from its peak in 2017, and it's below it's about where it was in 2015. Nissan's got a heat problem. Nissan is down about 16% from the peak in 2017, and sales dropped 10% last year. So Nissan needs to figure out something quickly. It's involved in all kinds of issues globally, and some in the United States. Its sales are getting hammered right now. So that's and I don't know how it will recover. It has a lot of internal turmoil going on in Japan, and so I'm not sure how that's going to work out. But on the positive side, Subaru set a new record. Mitsubishi set a new record. The Volkswagen set a new record. But BMW and Mercedes both increased their sales, but they were still down from their prior records in 2015 and 2016. The Korean automakers increased in 2019, but they got beaten down really badly in 2017, 2016, 2017. So they're still far from their records, but they're starting to recover a little bit. Their record was 2015, 2016, and then sales just plunged. And so they're trying to pull out of that. So it's a very mixed market, but most of the larger automakers are significantly down from their peaks that happened in 2015 or 2016, depending on which automaker. The hope is that somehow the plateau will remain a plateau. That's the industry's hope. They don't want the plateau to taper off. And right now, the plateau is tapering off. For the last 3 years, that's what it's been doing. And they're forecasting a further decline in 2020. And it makes sense to me. It's just structurally speaking, the stars are lined up against the industry. Now, Tesla, as you now know, Tesla is the second most valuable automaker in the world, behind Toyota. And in the United States, its market share is 1.3%. In China, its market share is close to zero. It sold a few thousand units, sold like 40,000 units there, out of 22 million. So you can't even really be measured. Its market share is so minuscule there. It's tiny in Europe. It's non-existent in Japan. So on a global basis, Tesla's market share is less than 1%. In the United States, it's having problems now selling its cars because, and we've seen that towards the end of last year because everybody who wanted a car has one. And what's hot now are SUVs and compact SUVs, and especially compact SUVs, and Tesla doesn't have anything. And sedan sales are dead in the United States. They have plunged by over 40% since 2014, and automakers are canceling the car lines because people aren't buying them. So that's the environment Tesla is facing here. And they're going to come out with a compact SUV pretty soon, but everybody else will have compact EVs, compact SUVs that are based on EV platforms as well. Ford's coming out with its Mustang EV later this year. That's going to be on a compact SUV platform. So, it's incomprehensible how a company like that with such a minuscule market share can have such a huge valuation in an industry that's not growing. I mean, this industry, the auto industry globally, is not growing. It's not growing in the largest markets. There's some smaller markets where it's still growing, but it's falling off a cliff in India right now even. And it's not growing in Japan. It's not growing in Europe. It's falling in the United States. It's dropping in China. And, so in an industry that has plateaued, the hope is that it will continue to plateau rather than drop off. In that industry where there's really no growth in the industry, the multiples the stock multiples are very low, and the stock valuations are fairly low, and because there's no growth in it, and Tesla is running into that. It's a minuscule player in this, and so it remains just incomprehensible how it can have such a large valuation, but there's a lot of other more incomprehensible stocks out there, so from that point of view, it just does what it does. But in terms of market share, it's a rounding error in the United States. When you say we've sold 17.1 million vehicles in the United States, Tesla is a rounding error. And so, it's in the news constantly, but not because of the volume of vehicles it sells, but because of all the other stuff that's going on around it.
It's one of the problems in the auto industry. Millennials are not auto obsessed like you and I were when we were in our teens, where owning a hot car was your goal. Now, millennials, if they can bike to work or walk to work or take transit, they feel pressure to do it. Plus, they just don't have the money to buy new hot cars.
I'm not sure that it's just millennials. I'm on foot. I live in San Francisco. My wife takes the car to work. We only have one car because we only have a garage for one car. And I walk everywhere in San Francisco, and it's beautiful. When we were living in Manhattan, we didn't have a car at all. It was too expensive and not needed. So when you start living in a city center or near a city center, or you can accomplish most by walking or riding a bike, and parking is expensive and difficult. And in San Francisco, if you park, you have to deal with parking tickets. In addition to all of the other expenses, that it's issuing parking tickets is a huge profit center for the city of San Francisco. They're extremely aggressive, and you're going to get them, and so that adds to the expense of parking a vehicle. It's just a hassle. So the companies offer the buses to work. So you have the Google buses and the Yahoo buses around here, and those tech buses. There's certain stops where they stop, and you can get on that bus, and they have Wi-Fi, and they're comfortable, and they take you to their campus. And there's other options. There's ride sharing. If you go out at night, you really don't need a car. You don't want a car when you go out at night in a city like San Francisco. And so that is happening. The changes in the way cities are laid out with a with the construction boom going on in the centers, that has made it possible for people to scale down their vehicle ownership. And it's millennials that live there, but it's also older people who live there, seniors, and people are just tired of this urban lifestyle. Their kids have moved out, they're ready to scale down a little bit and have a more convenient place to live. And so there's a concentration in city centers of population now. And I think that's one of the factors that impacted millennials play a role in that. But I think there are other generations that are also playing a role in that. And I'm sure millennials don't have, on average, they're starting to make pretty good money in the tech sector here in San Francisco. They make a lot of money. In other parts of the country, that may not be the case. But vehicles have gotten very expensive, and affordability is a big issue. And the industry has acknowledged that. Average vehicle prices in the United States are now closely approaching like $38,000, and after incentives and after everything, and there's not that many people that can afford that kind of a vehicle. And the nicer vehicles are a lot more expensive. The pickup trucks, the nice pickup trucks, the four-door crew cabs at $70,000-$80,000. It's not uncommon for a nicely equipped vehicle now to cost $50,000 or $60,000. It takes a lot of money to be able to buy something like that, and then you have to park it, and you have to deal with the expenses of owning and driving it. So the industry has acknowledged that affordability is an issue across the board, and and that impacts millennials, but it impacts everybody really who is not at the top income spectrum, and so the used car market is doing pretty well because of that. There's quite a bit of business in the used car end because affordability is just a real issue, despite low interest rates. Now, interest rates are very low, and that still is unable to increase sales. So I think affordability, the restructuring of the cities gradually, the rising age of vehicles in the fleet, and that they're higher quality and they'll last longer, people can drive longer before they get rid of them. Those things all are impacting new vehicle sales.
Was Canada able to escape the slowdown in auto sales?
No, that's the short answer. Canada has now booked the second year in a row of declining new vehicle sales. So in 2019, new vehicle sales fell by nearly 4% to 1.9 million vehicles. That's the second year in a row. They have now come down 6% since the peak in 2017. So in that respect, Canada falls right in line with the United States, lagging a little bit. Our peak here was in 2016. In Canada, it was 2017. So you peaked about 1 year later. But decline was a little sharper in Canada than it is in the United States. So it's a fairly similar scenario. Interestingly, in both the United States and Canada, but now pronounced in Canada, is the divergence between car sales, so sedan sales, and so-called truck sales. And truck sales is pickups and SUVs and compact SUVs and vans. And since 2014, car sales, so sedan sales, have plunged 36% in Canada. And truck sales, so pickups, SUVs, compact SUVs, and vans, are 56% in Canada over the same period. And this divergence has not called this Carmageddon. That it's really a consumer preference away from sedans. And car sales, the plunging car sales has not been fully overcome by the rise in truck sales. That's part of what the issues are. There's lots of cars now on the used car market. There are pretty good deals on the used car market. Automakers have canceled car lines, so there are not that many new vehicles as sedans available anymore, but they're still showing up. They're lagging in the used car market because it takes 2 or 3 years or 4 years for the big wave of cars to show up. And, they're showing up in large numbers on the used car market from rental car companies and lease terminations. And, so if you want to buy a car, there's lots of good deals available in the used car market, which puts further downward pressure on the new car side. On the other hand, there's not that much choices available on the used car market for SUVs and pickups. So people are more inclined to have to buy those new. And yeah, this divergence, is just across the board in North America, in China, and other countries as well. So sedan sales, and, everybody is talking about economy and in terms of fuel economy and so forth, but nobody's buying economical cars anymore. That's just, car makers are offering them, but they're just kind of dead. And instead, people are buying the much larger vehicles. So in Canada, that has, the decline in car sales has a lot to do with the overall decline in vehicle sales, because truck sales have gone up, but just not enough to make up for it. And, so at this point, I'm not into forecasting, what sales might be in 2020, but it looks like, I don't see a lot of improvement there. I think there's a lot of structural issues too in Canada, in terms of, saturation of the market and the maturity of the market, the concentration in urban living, the issues you brought up with, millennials not making enough money, the huge debt levels of, Canadian consumers, among the top in the world. That's going to make it harder for Canadians, to borrow money to buy these cars. The affordability issues are coming to the foreground in Canada as well. So all these factors are conspiring, I think, to keep a pretty heavy lid on that market.
Right. Now, what about potential sales for electric cars? I know in Vancouver there's interest because in the springtime our gasoline went up to $1.70 a liter. That's $6.46 per U.S. gallon. And of course in Canada it would be imperial gallons. So it would be over $7 a gallon, using just Canadian measurements. Is there much pressure around the world to go electric, apart from governments telling us they're not going to allow gasoline-powered car sales at some point?
Now, that's really an interesting question because, and let me say this up front, if there is a lot of demand for electrical vehicles, for battery electric vehicles, it will completely turn the car industry upside down. And the automakers are preparing for that. And they are, setting aside billions of dollars to prepare for it, because an electrical vehicle is much simpler to build than a internal combustion engine vehicle because of the powertrain. And the powertrain in an electrical vehicle is very simple. It is light and it's cheap to manufacture. The hard part on an EV is the battery, and the automakers don't control the battery. Now that technology, so the battery cell technology belongs to battery cell manufacturers. And that's expensive. But the rest of the vehicle is very cheap to manufacture. And, so when these battery prices are coming down, and that's a big issue, they've been coming down. But when they come down to where they make EVs price competitive with internal combustion engines, and when the battery performance increases a little bit, and there is enough demand, the auto industry as we know it, will be turned upside down. And yeah, big automakers are really, afraid of that. Unions are afraid of that because it means tens of thousands of layoffs. It will just restructure the industry. It will give unknown companies, a fairly easy entry to the market. We've seen that in China. There's hundreds of EV makers now in China. So if that happens, the industry will change dramatically. Now, we don't know if that's going to happen. And there's a lot of doubt about the demand for EVs at current price points, and at current, performance, battery performance. And, every automaker is going to come out or has already come out with EV platforms. And, as I mentioned earlier, Ford's, Mustang, compact SUV is coming out later this year, and it looks like to be a hot seller. But these are not mass market cars. Ford F-150 or the Ford F-Series truck is the highest volume vehicle in the United States, and has been for many, many years. And F-Series is close to 900,000 vehicles a year. If that converts to to an electric powertrain, that will be huge. And there's a lot of doubt that it can. Ford will offer a version of it, but we'll have to see if that version picks up. If that electrical version of its F-Series will become a mass produced product, or 300,000-400,000 people a year will buy it, and that just hasn't been established yet. We don't really know. Tesla is a niche maker, a niche automaker that sells high dollar vehicles to enthusiasts, and that's a very different ball game than selling 2 or 3 million vehicles to the general population. And there's doubts in the industry that there's demand for these vehicles. If the industry starts producing EVs like they're getting ready to, so they're all starting to come out with their platforms one after the other. And these are, designed from scratch, electrical vehicle platforms, and they're all well designed and they look good, and they'll be hitting the market this year, next year, and year after next, and dozens of new models. And if that happens and there's not enough demand for them, it will be a huge letdown for the market. I mean, there's a lot of investments that go into this, and if consumers don't go along with this, it'll be a battle. Automakers will have to cut prices. They will have to put incentives on them. They will have to, to keep the manufacturing plants running. And there's fear that this could be a miscalculation. I don't really know where this is going to go, but I understand that automakers are prudent with this. They don't all want to jump in with mass-produced vehicles, and suddenly there's no demand, and they're sitting on them, and they're losing tons of money. Tesla is losing money on every one of its cars. So automakers can't afford the GM and Ford. They have to make money, They don't have the privilege like Tesla to be able to lose billions of dollars every year. So, if they have to figure out how to manufacture and sell EVs in large numbers and make money doing so, that remains uncertain. The automakers are prepared for it, but it is going to be, this is like a generational shift. If that actually works, if that actually happens, it will be a generational shift in the auto market globally. And that may be what we're seeing the beginnings of, but, at this point, I do not see enough demand for it. And that's industry fear that they're plowing into this too quickly, and that, demand will just not be there for millions of these vehicles.
Yes, will there be enough Greta Thunbergs around the world to buy the e-vehicles?
Well, it's kind of a funny thing that EV buyers are held to different environmental standard than regular truck buyers, SUV buyers. Nobody in the United States really gives a damn about the environment when it comes to their vehicle. And so we don't buy EVs because of the perceived or real benefits it might do for the environment. We buy EVs because we like them. We like performance. They accelerate incredibly well. They're super quiet. They're cheap to operate. You don't have to go to the gas station. You just plug it in at night in the garage, and in the morning when you need it, it's charged up and you're ready to go. Many of them have a trunk in the front instead of an engine compartment, because the electric motor is so small. You can put storage under your hood. And, EVs can be, the electric motor has a flat torque curve, which is ideal for transportation. So you don't need to shift. You don't need a clutch. You don't need cooling systems, and they perform incredibly well. In terms of acceleration, in terms of towing, in terms of all of these. That's why subways have electric motors, because it's just ideal. And at the same time, EV buyers are held to this environmental standard, but, I don't know a single EV buyer who bought it because of the environmental issues. They buy it because they like it. And that's the American thing to do. You buy what you like. You've got money, And so now you go out and you splurge and you buy stuff, and even if you can't afford it, you borrow money to buy it, and you don't really care about environmental consequences of it. And EV buys on this ballpark. So I don't think the environmentalists will have any impact on this. It's just beside the point. The whole industry is focused on making these vehicles attractive to consumers, and it's not about the environment. It's about building a vehicle that consumers like more than any other vehicle, so that they will buy it. And I think that's how they're approaching it. And there's a lot of discussion outside of the industry, about how EV buyers are still, this and that. But EV buyers don't look at this. They look at the car, they look at the truck, and if it works for them, if they like it, if they see the benefits to them, they'll buy it.
Wolf, can you tell us a little bit about Wolf Street and how people can get involved with it?
Yeah, so everything we do is on wolfstreet.com, economics, finance, money. That's the only thing we deal with, no politics. wolfstreet.com. I also have a podcast, the Wolf Street Report, which is also posted on my site, and everything is for free. We don't sell anything. It's just news and analysis.
Wolf, thank you so much for being on This Week in Money.
Thank you, Jim.
My guest has been Wolf Richter, publisher of wolfstreet.com. He was speaking to us from San Francisco. And that wraps up our show for this week. We'd like to thank our guests, Bob Hoye, Allan, Mark Angell, and Wolf Richter. And thank you for listening. If you have any questions for our guests or the show, you can send them to info@housestreet.com. Now stand by for company showcase updates from American Manganese President Larry Reaugh and Don Mosher from Cyprus Development. I'm Jim Goddard. We'll be back next week with more This Week in Money.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of House Street Media Incorporated. Executive producer is Tom Allan. Welcome to Company Showcase, an advertising feature on HouseStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh. He's the CEO and president of American Manganese. Welcome back to the show, Larry.
Thanks, Jim.
Larry, was it really hustling and bustling at the Vancouver Resource Investment Conference last weekend?
Well, I'd have to say yes. I haven't seen a crowd that big in a number of years. And, we had a good location where people were coming in the door and walking by our aisle, so we had, very good intermittent interest in our booth. And I felt that the general overall tenure of the show was very optimistic, and that goes along with my thinking that we're coming into a very strong bull market on the venture exchange. You're starting to see that with some of the palladium stocks, that have been dormant for, I guess, as long as every other stock out there. But they have, doubled and tripled in the last little while. But they're kind of running on the price of palladium, which hit $2,500 an ounce. And I can remember when palladium was $100 an ounce and gold was about $800 an ounce. So that's a big switch around. Gold is strong today, and so is silver, but palladium is down, and so are the palladium stocks. So the palladium stocks will run on the price of palladium, and I think they're probably going to see a correction in that market, but we're just hopefully seeing the beginning of a strong gold market. We've hit over 1,500, 1,600, and now I'm thinking that we're heading in the right direction again. So, yeah, the show was good. It certainly was able to buck up my spirits, and my shareholders that were at the show, they were very optimistic about everything. So, it was a great show. And speaking of shows, we just did a press release here yesterday on attending the show in Austin, Texas, called Fully Charged, and that's probably better venue for us than the resource show because there'd be a lot of EV car enthusiasts there, as well as people that are interested in technology. It's the world's #1 clean energy and electric vehicle show, and we were invited to actually participate in a panel, and that panel was is well structured. Let me just tell you who's all going to be on that panel. It's Sarko will be representing us on this, and our Chief Technical Officer will be representing us on the panel. Benchmark is one of the companies that will be there, and we, basically circular energy storage, Lithium works, and Nouveau Bondi graphite. We'll have a booth, and so I'm expecting to get a lot of interest out of that show. There's all kinds of things happening out there that are going to be do nothing but increase our visibility and also increase our product. And there's a new battery thing called Battery Passport, and it is the first of its kind, and it's going to address areas including compliance with human rights and environmental footprints and world economics. And it's organized, and they have 42 in the organization now, representing mining, chemicals, batteries, automotive, and energy industries, with an annual revenue of $1 trillion. So that's going to put the spotlight on it. They talk about the circular economy. They talk about basically value chain and data of batteries. We have an MOU, if people remember. Back a couple of years ago, we signed with Circular out of the UK, and so we're ready to step up to the plate with them when it comes to accumulating batteries that have not had origins in the DRC. So that's another thing that we're really excited about. One thing that I've been noticing is that companies that are going into recycling, including us, although it's been on our agenda since the beginning, is what do we do about getting a license to recycle in an area? And I read an article where a South Korean recycler, basically almost 2 years ago, announced that it was going to build a recycling plant in New York State, and they haven't done so yet. But the stuff I'm reading is that they're basically not being able to answer questions from the population in the area or the government on how they're going to keep this thing as a clean tech and not pollute the landscape. And that's one of the areas that we have worked on. We want to keep our close to 100% recoveries and have a circular economy, and we're working on that. And, this takes time and a lot of effort, but I think we're one of the few companies that will be able to maybe get through a environmental permitting phase when we're ready to go, reveal the location of where the plant is. And when I say reveal, it's still up in the air where we're going to locate that plant. We've had people in Canada that talked about, governments that say, if you go into northern Ontario, that might be the place. Well, that may depend on a lot of conditions that we'll have to examine before we went there. The Lower Mainland's another place that people talk about putting in a recycling plant, seeing as it's for scraps, cross-border scrap material, which is basically benign, would not be that difficult to get in here, or we could locate in a state in the U.S. where there's a lot of scrap material being developed, but we don't know. But we do know that, bar none, that any company that's going to put up a recycling plant, if anything that's over a few hundred pounds is going to come up against basically getting an environmental permit to do so, and whether it's a municipality, a city, a county, or a province, or whatever, that where this plant is located, you're going to have to meet the environmental requirements, and you're probably going to have to invent a lot of those requirements along the way. So I'm looking forward to a great year. I think this is fantastic, and we've got a lot of attachments to go with the podcast. For example, there was an interview with Save Canadian Mining that was done by Steve Darling, and I'm going to be attaching that. I'll be attaching other items that will be of interest to our readers and shareholders. And I know that everybody is waiting, as we are, for to release at least preliminary results on the stuff we're doing for the DOE labs. And so I'm hoping that we can do that very shortly. Cometco has been very busy catching up on projects and starting new projects. So, we're in the queue, and all we can do is hope that we get the results very soon, that we can at least put out preliminary results. So I'm excited. I think this is going to be a great year. I think that we're coming into a very strong bull market, which will change the goalposts. I think with this Save Canadian Mining and going after the predator shorters is going to have a definite effect on the market sometime this year. And because basically you got companies out there that are destroying economies and not building economies, and that is not a good thing. So you got to bring back that uptick rule. And I'm looking forward to next weekend being in Austin. That will be a very exciting arena for us, and one of our directors is coming up from Mexico to join us, Ed Skoda, so we're looking forward to seeing him. And that's basically what I'm going to talk about today, Jim.
Larry, for people new to American Manganese, what is the company all about?
American Manganese is a critical metals company that has a focus on recycling lithium-ion batteries, which is like urban mining. And I want to remind people there's not a lot of difference between treating the batteries and getting out the cathode materials than there is in mining a project when it comes down to the milling and the preparation of the material that you need. We have a lot of information at our website, AmericanManganeseInc.com, where people can do due diligence, and we're traded in on the Canadian market, the TSX Venture Exchange under the symbol AMY. We're traded in the U.S. under the symbol AMYZF, and we're traded in Frankfurt under the symbol 2AM. And we can be reached at our, at least people can reach me at my email address, lreaugh, R-E-A-U-G-H, at amymn.com. Or give us a phone call at 778-574-4444.
Larry, thank you so much for the update.
Well, thank you, Jim.
I've been speaking with Larry Reaugh, CEO and President of American Manganese. I'm Jim Goddard. Our conversation took place on January 24th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of Howe Street Media Incorporated. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Don Mosher. He's the corporate consultant for Cyprus Development. Welcome back to the show, Don.
Very nice to be here. Thanks, Jim.
Don, the action never stops at Cypress. What's going on?
Just working away on the pre-feasibility study. We're getting fairly close to being able to publish it. I expect we'll see something in the next 3 to 4 weeks, based on my conversation with our CEO, Bill Willoughby, this morning.
And for people who may not be familiar with Cyprus Development, what do you guys do and where are your actions concentrated?
We'd fall in the category of an exploration development. Well, we're just transforming from an exploration company into a development company. I guess that would be the best way to put it. We did, all the exploration drilling. We've delineated out an area that we studied in the form of a preliminary economic assessment, and now we've graduated to a pre-feasibility study, which will then graduate into a feasibility study, and then you start to take a look at raising the money for construction and actually moving it towards production. But we're not the company, I don't think, to take it all that way. I would imagine once the pre-feasibility study is completed, then we'll either go out looking for somebody to buy the project or at least joint venture it and take it to mining.
And so what has Cypress done in the past, and maybe give us a bit of your track record?
Really, this is the first significant project that we have had. We do have a small high-grade zinc project that we did basically sell to another company here. Pasanex is a producer in Turkey where they direct ship zinc, and they decided they'd like to buy that project off us. So we're in the middle. We've been receiving money from them. We just received another $100,000 from them on it, and they're going to take that thing forward to wherever it goes. Our entire focus is on the Clayton Valley Lithium project.
Where is that?
It's in Nevada, which is one of the best mining jurisdictions in the world. One of the largest gold producing jurisdictions in the world. And, they've got very good mining laws. They understand mining. You're very secure in your ownership of a project. And, permitting is never easy, but it's relatively easy compared to some other jurisdictions. It's not like we have to worry about, environmentals showing up and saying you're not cutting down all the trees because we're out in the middle of the desert. And we don't have any protected animals that we need to worry about, anything like that. In certain areas in Nevada, you've got, the sagebrush hens or partridges or whatever. We don't have any of those concerns. It's actually in the backyard of the oldest lithium brine producer in the world, which is Silver Peak's operation owned by Albemarle. So it really is a true mining area, even just in the neighborhood.
How important is it to have a stable geopolitical situation where you're developing?
I think it's absolutely critical. Elsewhere in the world, whether you're in Canada or you're even in the Atacama Desert, the concerns are more and more on proper dialogue with First Nations, with local inhabitants. So in the Atacama Desert, there's a real issue with water, obviously. It's the driest desert in the world. And the lithium production there all comes out of brine, so you're pumping water out of the aquifers that could be used for irrigation and for human consumption. So they've blocked any expansion up there. Fortunately for us, we found what appears to be a new source of lithium in the clay stones, and we just need to move the project forward and complete the pre-feasibility on it so we can demonstrate that you can actually extract lithiums out of this at an economically viable cost. We have another company to the north of us, which is Lithium Americas, and they're developing a claystone project Thacker Pass, and we're almost moving in tandem with them. I think we're a little bit ahead of them, actually.
Don, how can people get more information about Cypress, and also where are you traded?
All our information is available on our website, which is cyprusdevelopmentcorp.com. And we do trade on the Toronto Venture Exchange under the symbol CYP. We do have a designation down in the U.S. We trade on the over-the-counter market as CYP.V. And there is actually a OTC Frankfurt listing, which is C1Z1.
Don, thanks a lot for the update.
Thank you very much, Jim. Have a good day.
My guest has been Don Mosher, corporate consultant for Cyprus Development. I'm Jim Goddard. Our conversation took place on January 23rd.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.